Let's talk about the 5 stages of financial independence, and then you can kind of evaluate for yourself where you are, where you want to be, and how to get where you want to be. We'll also look at a little market update, and then we'll kind of see what the headlines have in store for us. Take a look at rates and a few other things as well. And kind of without further ado, I'm actually going to just jump right in. We do have the S&P 500 up almost 0.5% today. The Dow leading the way higher, the technology index kind of being weighed down by some continued softness there in NVIDIA. Remember, NVIDIA didn't really do anything wrong, but just because of the pressure on their shoulders, the scale, and that they've kind of significantly increased sort of buying their own revenue at this point, investors aren't as excited there. Important to note, though, the rest of the space is totally blowing up today. Things like, well, here, let's go look. You've got things like Dell, HPQ, NetApp. Here we can see a few more down here. Qualcomm as well. So tons of strength in that group, and then some softness in some other places, but generally actually a good breadth day as well. We have a lot of stocks moving higher. In terms of headlines, Kevin Warsh is now the Fed chair, and Trump commented today that he expects rates to be falling there soon, in accordance with the new Fed chair. Also, earlier this week, he was asked directly, are you going to pressure him to lower rates? And the president said he would not. So that's kind of where we are on rates. What are other interest rates doing right now? We do have, whoops, wrong button. We do have the 10 years now on a 2-day losing streak, like in a pretty decisive way. Not totally unexpected there after a strong move higher that we saw earlier this month. But, hey, that softness is very welcome. And if you do broaden that out for the past few years, you see that 10-year rate is kind of still in the range, just on the upper end. And where it is now is okay. Again, anytime you're going to recognize something as being a potential headwind to the market, you don't want to jump the gun because markets are very resilient. We've all seen and observed that over time. And so, we would expect that to be the same here. It would take a very, very clear and distinct move out of the range it's been in going back to 2023 for the market to kind of open its eyes and say like, what's that? We're going to now, address that. So again, something to watch, but nothing, actually a little cooler this Thursday and Friday. Jumping over oil, oil's been kind of range bound here, waiting for a deal to happen in the Middle East. Metals there, relatively flat, and then crypto kind of holding in a similar range as it's been in, kind of range bound as well there. Jumping over to the S&P 500. Let me see if there's any other headlines we wanted to hit. Yeah. I will hit on, we saw yesterday the government step into the quantum space, and we've now seen this 3 times. We've saw at least 3 times. We saw it with Intel. The government stepped in, and part of the reason was because Intel was attempting and is attempting to kind of create their own Taiwan semiconductor in the United States. And that's sort of a national security kind of thing. So we saw the government step in with an investment and broker some deals there. We also saw it with MP Materials and some other rare earths companies. The government stepping in, again, a little bit related to national security in a sense, because the government's thinking, well, we need to secure these rare earths in order to kind of for our own safety and security as a country. And then as of yesterday, we saw the government step into the quantum space with an investment across multiple companies. And again, there's that little thread there of, is quantum computing going to be kind of a national security topic, and if so, the government will want to be a part of that and support it, so that they can, again, kind of pursue national security. That's that thread between the three of them. Internally, we're looking at how the market has responded to each of these, including the new one, quantum, and are looking to adjust accordingly there. So there might be a little bit more to come on that. But quantum has been very, very hot in the past few days. Quantum stocks, quantum ETFs, things like that. All right. Jumping over the S&P 500, again, vicious rally off of the March 30th lows, and not quite back to a new all-time high set on May 14th, but the NASDAQ did set a new high today. Okay, and jumping over to, so different stages of personal financial independence, and then kind of the pursuit of financial freedom. Of course, financial instability, right? You got to get your stuff together. So you need to have your income exceed your expenses. And that's sort of the first level of stability. So then when we get to stage 2, we're thinking about financial stability. When I think of financial stability, I'm thinking of someone who also has a safety net of some kind, right? Even if that is some investments, but talking 6 or so months worth of assets stacked up, so that in the event that you lose your job, you are not dependent on someone else during that period of time where you are out of work and then into another job. So financial stability from that standpoint is thinking about a 6 or so month nest egg where, again, something bad happens to you at your job, you don't immediately have to call someone. That is financial stability. Financial security, for me, is one level up. So then let's say financial security, you've got, let's just say somewhere around $400,000, $500,000, $600,000 saved up, and your living situation is stable. Maybe you have a mortgage, maybe you're renting, whatever, but a few $100,000. And then in that scenario, if you lose your job, so you're out of work, you have more than just stability. You have some security there, because, like, let's say you have a $500,000 portfolio. You could reasonably expect that portfolio to generate about $50,000 in a year in returns. Now, could you retire on that? No, but what you can do is bridge yourself from one job to another job if, again, you were laid off, without drawing your nest egg down in like a violent way. So in the financial stability part, if you just have a 6-month nest egg, you're going to be drawing it down violently and immediately. In the financial security part, you can't retire. You're not financially independent, but you're also mostly going to be spending appreciation that's happening in that nest egg. You're not necessarily going to be totally killing the nest egg, even if you're out of work for over a year. So that's that security part. If we go to financial freedom, this is going to be someone who is, again, probably 50 years old or maybe even older, to where they wouldn't want to retire. But if they were put out of work for any reason, they would have a very long runway between what they were in and where they want to go. Maybe even taking them, a few years off in between to try to kind of take some time away and figure something out. They aren't necessarily wealthy, but they are free in a sense that they aren't totally dependent on a new job in 3 months or even 12 months. They have some flexibility, and they'd have enough assets where they would be spending, they'd probably be withdrawing 7% of their nest egg over that, year or 2 years where they're out of work. So it's above a safe withdrawal rate, but not crippling for the time being. And then you do get to financial wealth. And these are going to be the folks who their assets, whether that's rental properties, whether that's stock portfolios or whatever, their assets are generating income that exceeds what they were making even while they were working. So then imagine somebody's got a $10 million portfolio, even a $5 million portfolio, and it's kicking off 5%, 3% income or 10% in returns. And either way, that income or that return exceeds the income they were making while they were even working. And that's wealth. That's true financial freedom, to where you have no concerns. So again, maybe think about where you are, what stage of financial independence you're in, and kind of when and how you're going to get to the next stage. And then obviously, you want to talk to an advisor about something like this, you know where to find us, and we'd be happy to do that. But this is not financial advice. This is just a financial education presentation. You must do your own due diligence before acting on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com. And all the opinions expressed in this video are mine alone. So yeah, that's all I have for you today. I hope you have a wonderful day, a long weekend, and I look forward to talking to you soon.